Good morning, everyone. How's everybody doing this morning? Hey, what's going on? Another slow night. Hey, Al. Johnny, how you doing? Hey, Travis. But here, what's going on? Hey, Dave. What's up, Raj? How you doing? Okay. Hey, Trademaker, Harris, Al. How's life in Port Jeff? Did you have a good Thanksgiving? Okay. Well, let's see. It's an inside night. Now, something interesting is going on because we're getting over the last few sessions. If you notice, our lows are getting higher, right? Now this is Globex, so it's still now this low here, okay? This low right here, that's a poor low. So basically a poor low, all that means is there's a lot of competitive buying at that low. So traders will say that the lows are getting higher. So what that means in a market, there's a bid and there's an ask. So the ask is the seller. The sellers, when they raise price, the bid will follow, right? So the buyers are following the sellers higher. Now remember, the last couple of days we were harping on this 68.12 area. And you'll notice that 2 days ago we had a 68.12 quarter low. Then yesterday's low is higher. Tonight we are nowhere. We can't even get under 34. So that's telling me, right? Structurally, what that means are there are buyers here between yesterday's low and the overnight low, right? When you look at a chart, my friends, don't think about patterns because they're not going to help you unless you memorize a pattern and you can trade that pattern over and over again and then adapt that pattern for order flow, right? They're going to give you all this stuff to memorize, head and shoulders, Selsun blue, right? All these weird, you know, bulls holding flags, raccoons holding beer cans, all this stuff. How do you know where to take the trade, right? Well, if you get down to a poor low and you're short, that's where you should be covering. Pretty simple, right? If the market puts in a poor low, you go long, you put your stop under the poor low, and you sell into strength as the market goes higher. Now, how do you know to do that? Because you know that the bid is at tonight's low of 68.37 quarter. Now, when I talk like this, does that make sense to you guys? If you know somebody's buying 68.36, you buy 37 and jump them. Does that make sense? What I'm trying to do is I talk to you guys like you're traders, but I'm not sure if you guys are understanding what I'm saying. No? Yes? You get it? Does it make sense? Oh, yeah. Stay on point, Alexander. Don't worry about where I posted the vid link right now. Do you understand? I'm asking you a question, you're asking me a question. Right? I'm trying to see whether or not I have to change my vocabulary because I'm trying to keep it simple. And a lot of the times I think I'm talking about stuff in a very simple manner, but people are just completely out there in left field and they have no idea what I'm talking about, and yet they're too embarrassed to say, JJ, what the F are you talking about? Right? Because you guys are too polite, you'll just go, uh huh, uh huh, uh huh. And some of you, of course, are making breakfast to your kids, doing whatever. So, of course, your attention span, right? Dave, there's the link, Dave. Does that make sense? So if I say you've got a poor low at an area, you buy the poor low, you put your stop under it, and you sell into the strength that when the market goes up. Oh, Jesus. Alexander, I don't have time for you to break my balls on this, okay? Just answer the right. I'm just trying to ask you guys if, right, I really am not in the mood for that shit, okay? Okay, all right. So just fucking answer the question or be quiet. Okay? Right? We're not in kindergarten. Okay? All right? Okay, go get some coffee. All right? So, I'm trying to help you guys understand so you start actually making some money, right? That's why I'm asking these questions. So, I'm trying to help you guys. All right. Okay, I'll just get back to analysis. All right. If you don't understand, rewind the thing. I'm not. Ugh. You're damned if you do, you're damned if you don't. Okay. All right. It's just like when you're talking to people and they're like trying to get you distracted, right? You're like, it's no wonder you guys don't make any money. It's like you can't concentrate, right? It's so. Anyway, let's get back to it. Ugh. Overnight inventory is long. We're looking for a move lower, okay? To correct that. We have a poor low, and we will look to see if that poor low gets taken out during the RTH session or getting as we get close to the RTH session, right? So it's almost like a P profile tonight. We've had little inventory corrections down. The biggest first level is going to be the 68.48 level, okay? Let's go take a look. So J period and K period, no large inventory corrections lower. We had an inventory correction down here in I period. And I haven't done the balance zones yet. So I'm just going to go in. It's going to be fairly easy to find a balance zone. Because we've been in distribution balance pretty much all night here for the last 5 hours, this is a balance. As soon as you see that, we're going to kind of back and forth here, there's a balance there, right? And you can still use your balance zones from Friday. Oh, look, a seller. How cool, right? So what I'm trying to do is I'm trying to find that two-sided trade, and I'll be looking for highs and lows. So I'm looking for a high and a low. We look below that low. Do we go back to that high? When we look above that high, do we go back to that low? So I'm looking for two-sided trade. And I'm kind of close here. It's not perfect. 52 to 55 and 3/4. It's a tight area. So you could even use this, that high, that low, right? We look below that low, we go right back to that high, right? At your balance zones, I like to use, generally, what I like to do is I like to do a fresh balance zone every morning. Unless I can't find one, then I'll use one from, the night before, where they park the inventory. Make sure VWAP is anchored at the right place. I anchor VWAP at the Globex open, which is 11 o'clock my time. Okay? So this is a distribution balance. When it breaks, you'll have targets. So as it breaks 52, Globex open 6 p.m. your time, 11 o'clock my time, Johnny. I'm 5 hours ahead. Okay. So we have overnight inventory is long. You can see that now, right? Right. Overnight inventory is log. It's adjusting and adjusting lower, right? Yeah, Alexander. That's what I'm trying to do, right? Sometimes I get frustrated because I'll be talking and you know people are talking over me and stuff like that, and then 2 days later they come up to me and they go, "I blew up my account." It's like, well, you're not listening, right? So it's okay. You get a little frustrated. So anyway, here's a touch of VWAP, right? That's expected. Where am I looking? I am looking for this area here at 47, right here. If you are short, right? If you are short this level here, now I'm just looking at this. I haven't taken a trade yet. I'm just drawing my levels. I want to see if my levels work, right? Competitive buying, you're front running. Exactly, Harry. Exactly, right? So what I'm trying to do is I'm trying to see whether or not it's going to break. If it breaks VWAP, right? If it breaks VWAP, we'll come down here to 47. Now, structurally, 47 is that V low. And to correct overnight inventory all the way, we would have to get a print at 68.43, which is the close from yesterday, right? So yesterday's cost basis is here. We've taken and we've sold it here at night, right? That's normal business because yesterday's M high is up here at 53. The market liquidated yesterday. But then if you pay attention to that M and N period and that K period, when this all falls apart later on, if it does, that poor low where there's one tick of excess, that's going to be the big area that we're going to look for because there's K period, L period, M, and O. So for half an hour, hour and a half, 2 hours, 2.5 hours, for 2.5 hours, there was competitive buying at 68.37. So that's a big level of interest for us, right? Bids off VWAP straight back up over 52. Maybe we're not ready to sell off just yet, right? Let's see. Is this a look below and fail of 52? I'll get the old trading software up and going here. So if you are going long on a look below and fail, you know that there's going to be sellers here at 54 and change, right? You know there's going to be a seller there, right? There might even be a seller just underneath. So if you're long 52 and a half, 53, if you got good trade location, right? If you're long in that area, your first target is there. That's how you trade. If you're a short-term trader, you want to put your sell order. So say you're long here, your stop is just under here. You know that there's a seller here, so sell one contract before that seller. If that gets taken out, sell another contract before that seller. Does that make sense? Do you guys all understand the concept of front running? Front running means if I know someone is selling at 5, and okay, I have inventory, right? I have something to sell. I have an ES contract. So I am a seller. Now, there are going to be other sellers who compete with me to get the customer, the buyer, right? So if I know that they're going to be selling at 5, I want to sell at 4.90 just so I can get rid of my inventory, right? You need to turn your inventory into cash. That's what trading is. So if you're long, right? Now a lot of traders, someone just asked, did anybody buy VWAP? Take the VWAP bounce. That's not a bad trade. Your stop would be here under the bottom of that candle. So if you were long off of VWAP, say 50 and a quarter, 51, your stop's going to be just under VWAP. It helps when VWAP is flat, right? When VWAP is flat, you can take trades off of it if you're quick, right? But when VWAP goes like this, if it curls like this or it curls like this when the market gets volatile, do not try and initiate trades off of it, right? When the market's nice and slow and VWAP's not moving around too much, then, but I don't recommend it for people who are not consistently profitable. I recommend you waiting until we get over 52 so you know that that sell order is clean. It's cleaned out. That's the reason why I tell you guys to wait a little while, because under here, it's still not sure. You guys can't read candles quick enough, right? In the way, like, I'm sure you guys can read candles and put patterns together, but you can't read candles in a practical way to actually make money quickly enough. That's why you should take the look below and fail of 52. Put your sell orders out just to get used to it. Once you get faster at execution, you might be able to buy this wick, right? Or what you can do, now this is really finicky, and of course it looks really much better after the fact. You'd be buying 51 and you'd put your stop here, right? Where this, but that's hard to execute. It's easier to say after the fact than when it's actually happening. And that's a problem with a lot of trading. They tell you to do stuff, but it only looks good after the fact. Like when you're in it, it's very hard to see and very hard to execute. That's why I give you a fixed level like 68.52, because it's not going to move. It's always going to be 68.52. And if you offer above 68.52, you know the sell orders under it are complete, right? Now we have a seller a little bit lower, just under 54. So when you take a trade, right, you want to manage your expectations, right? How do you manage your expectations? Well, you manage your expectations by marking out where the sellers are. If you're going long, you yeah, hindsight's always 2020, right? It's easy to say, "Oh yeah, I bought it here and I sold it here." But when you're executing, it's a lot easier to buy it over a fixed reference and put your stop underneath that reference. And what is the business reason for the trade? The business reason is that the sell orders underneath 52 are completed. And the wholesale size sellers don't need to sell under 52, right? A seller does not want, people will say the sellers are holding down the price. That just is ridiculous. Why would a seller hold down the price? You have to think about it in a business sense. If you are a seller, would you rather sell something at $3 or at $5? Right? You'd rather sell it at 5. Why would you hold the price at 3? The only reason that you're going to sell at 3 is some other schmuck is selling at 2.90 or 3. Right? I know there's a lot of stupid quotes like buyers are in control when price is going up. Do people actually think about what they say? I don't think they do. Why would a buyer want to pay more? If I'm a buyer and I'm in control of the market, what economic benefit is it for me to buy at a higher price? Doi. Like, there's a lot of misleading quotes out there, right? And it's just, if you actually listen, if these people actually listen to what they said, they probably wouldn't talk as much. Right? Here's a little secret. The seller sets the price according to the buyers coming in. Right? The sellers set the price. Right? If there's a lot of buying, we move price up. If there's no buying, we put it on sale. Just like a store. That's it. Price moves according to the customers that come into the store. Now, a fancy ass way of saying that, Johnny, is order flow trading. Right? You see these people, oh, are you an order flow trader? Right? And, are you an order flow trader, right? And you get those. You guys know who Cat Williams is? The comedian, you just when he gets that look on his face where he's just exasperated. Are you an order flow trader? And you're like, excuse the language, bitch, please. Everyone is an order flow trader, right? And now they're selling order flow software, right, to get more money out of you guys, right? When all you need is a candle chart. It tells you there's a seller right here, right? I love Cat Williams. He keeps it real, right? You can tell there's a seller here, and there's a seller here, and there's a seller here, right? You don't need to spend $5,000 on software to tell you that there's a seller at 68.54. Yes, they're watching the footprint charts, right? But dear, we're all order flow traders, right? If we weren't order flow traders, there'd be no trading, right? Order flow is just a fancy way of saying customers coming into the market, and you're trading based off of their intentions. So if there's a whole bunch of buy orders, you go long. If there's a bunch of sell orders, you go short. It's, you know, and footprint charts, there's nothing wrong with footprint charts, but it's very difficult. I don't know a lot of footprint traders who actually make money, because what happens is they get so wrapped into the footprint that they forget what's going on around, and they'll be like shorting in the hole and buying at the high and just totally misreading. DOMs and footprints are very hard to read and interpret the information in a practical way because people don't have any concept of trading size. It's really easy to get fooled, right? Yeah, the more simple we keep it, it's so much easier. So listen, if you're buying a position between 52 and 54, right? Say you're doing a little long here, right? Now the market has changed, right? It just did this. Now do you notice that the candles are smaller? Right? So what I'm trying to teach you guys now is the difference between that candle structure and that candle structure. That means there's a change in business. Okay? There's a change in business between what happened here and what's going on here. Right? So it's less busy now. So when it's less busy, you have to change up how you trade this. Right? That's why you do the look below and fail and it's not working and you're stuck in that trade. So what you have to do here is you have to build a position between 2 and 4 and put your sell orders where these white lines are. Your risk is 52, right? Now, because London is opening in a minute, I would wait to see if London can take out the K and L low. Because if it can't, it's going to turn and flip and try and take out the overnight high, right? Or if it's insanely slow, it'll just sit here and go sideways like this, which is not what you want as a trader. Right? So real order flow trading means knowing the difference between this and this. You see the difference? That's real order flow because this is telling you that larger orders are coming into the market and transacting. This is telling you that business is slow. And this is a practical way to look at candles without having to memorize a bunch of goofy patterns, right? Just wait it out. London's opening in 5 seconds. And London always tries to get a little lower. It always tries to sneak out some cheap paper, some cheap product, right? It loves to take out the lower stops and then turn and go higher, right? That's like if you go to London and they rob your Rolex, right? Everybody knows you don't wear a nice watch walking around London, right? You don't want to trade the London Open because they're probably going to rob you, right? See? Look below and fail at 52, but we know there's a seller at 54. The only way to trade this is to build a little position here, right? So you'd have to go position long and sell into strength, right? At your risk is going to be 51 and 3/4, 52. And if you can't, see, you're going to have to sit in that trade. See, because London already told you in that 1 minute candle what the range is. So the candles are getting smaller, not bigger, right? And there's that 68.54 1/4 again from my 4-hour chart. So let's see if we can get back over that. If we can't get back over 68.54 1/4, I think we are going to go and try and run the lower stops. Does that make sense? So you have an idea of what's going on. These are your targets, right? So we keep finding bids at 52, okay? Now let's see if we can get up over 54. We need that seller to move. They're not moving, right? They will move when they see buyers. And if they do move, right? So if you're buying, say, 53, right? Put a 53 and 3/4 offer out and see if it gets taken. If it doesn't get taken, then you know, right? You know, right? Put a 53 and a 54 offer out there because there is no reason for you to be long if nobody wants to buy your product, right? Well, let's see if we can get rid of a contract at 54. There we go, out of 54. Next offer is 54 1/4, and there is a wall at 54 1/4, right? They are taking my contracts at 54. I'm long 53 1/4. I'm just doing this just to test the market with micros. They're buying my 54 orders, but they are not taking my 54 1/4, right? So if they're not taking me at 1/4, then I know I have to get rid of my contracts at 54. There we go. They took my 54 1/4. They took my 54 1/2. I got one left at 54 3/4, and I'm not getting out. And let me see. I'm going to move that down to 54 1/2 and see if they take me. So I just bought some micros at 53 1/4. I'm flat, right? So I'm just test trading that to show you guys that's you had to buy a position at 53 and sell it into this strength. Now, would I like to have made 56? Hell yeah. But if nobody's buying it at 56, I got to get rid of it where I can. Right? Now I'm not the most patient trader in the world when I'm long. Right? You show me a bid, I'll hit it because I know there's another trade. There you go, Moran. There you go. Exactly. Exactly. Bingo. Perfect. Very good. Oh. So we are 1 week away from the Fed decision. So, oh, goodness. See, there's that seller. I know they're waiting here, right? Because do we have a poor high? No, we don't. We have 3 ticks of excess on that high, so that's a proper high. And that's why I sold into it. Because my entry, I mean, if I was, my entry is 53 1/4, 53. So I was long here. Right? And would I have loved to sell 57? Sure, but I'll take what I can get. Also, I'm testing out the order flow. I'm testing out what kind of customers are coming in. So, do you see how I said we have to build a position here and sell it into strength? When the candles change, you have to change. This is the biggest problem that traders have, is not being able to adapt to when the market switches, right? Like, where's Jiraj? It's like when a boxer switches to southpaw, right? Right? When it throws the other fighter off, right? The market does the same thing. It's going to switch up. It's going to have these big things, and then all of a sudden that's when business gets slow. So you can't trade this like you trade this. Step on his foot, exactly. Right? So that's that's what you gotta. This is a big thing, and I've been trying to communicate this for a while. Because what happens is people try and take this trade the same way they take this trade, and they get stopped out and they get frustrated because they don't understand that the business from here has changed to here. And look how quickly it changed. It changed in half an hour. This is why it's a big sticking point for everyone. So don't feel bad if you're not getting it. There'll be times, sometimes like if I don't trade for a day or two and I come back and I'm not in sort of sync with the market, I'm stepping all over my toes, right? It's just, it's brutal. So now you know how to identify it, you know what to be aware of, you're going to adapt. Exactly. There was follow through. Exactly, Lonnie. Right? Exactly. You hit it on the head. Here there's follow through. Here there's no follow through. So you have to change your style from this to this. This means you can scalp it and you're going to get a fairly quick result. This means you're going to have to hold the position, build the position, and you might not get as much. Why will you not get as much? Because business is slower here than it was here. And no candlestick chart guru is ever going to tell you that because they don't understand the business. All they do is memorize patterns. But if you understand the business, you can manage your trading and you can go, okay, you know what? I took a look below and fail at 52. Well, Howard, I just told you. What did I say, Howard? Look at the two different types of candles, right? The first look below and fail of 52 goes right to 57, right? The second look below and fail goes sideways between 52 and 54. Do you see? You have to sit and watch and wait, Howard. Does that make sense? The more you look at it, Howard, without saying, I need to take a trade, the easier it will be to see it because you don't have that financial dragon on your back, right? When you are looking at a chart going, where is the trade, right? You will not learn anything because you're looking for the trade. You're trying to make money. And there's nothing wrong with that. It's human nature. But what you're going to do is you're going to miss a lot of the details because you're going to be preoccupied with, can I make some money here? If you take that away and just look at this purely as education and then try and make money, right? You will find that you will actually learn something. That's why we tell people to sit and watch, rewind. You're going to spend 99% of your time watching and learning and 1% executing. That's all you need, right? All you need is that 1% to execute if you do it properly. That keeps you from over trading. That keeps you from unnecessary business expenses. Do you see how I'm going with this? Right? Keeps you from over trading. Right? So if you understand what's going on in a market, you are better able to take advantage of business opportunities. If you're in a market and you have no clue what is going on and you're just trying to make money, you're going to lose all your money. Guaranteed. Right? You know, they always say 95% or 99% of retail traders lose money. And everyone's going, gee, I wonder why. It's because they don't know what the hell's going on. How could you possibly make money in a business where you absolutely know nothing about the business or how it operates. It's like, I want to open a restaurant. Well, do you know anything about cooking or food? No. Right? I'm going to be a barber. Have you ever cut anyone's hair? No. Right? Just any business, you got to sit and watch, right? That's the only way, right? If you were doing any business that didn't have an immediate financial result, you'd be much more willing to sit and watch. It's because everyone's saying that they made money and everyone's doing this and everyone's doing that. It's a lot more tempting to just start jumping in and trading, but it's a quick way to lose all your money, right? Yeah, and that's the problem with this business is they don't tell people you're gonna have to sit and watch for a long time, right? I had a buddy of mine, William, and unfortunately he's not with us anymore. This guy was like I used to call him the human algo. He would do 200 scalps a day. He's just in and out, in and out, in and out. Eventually it took out his heart, but he told me when I started retail trading, he's like, you should just paper trade for a year. I'm like, what are you talking about? I know what I'm doing, right? He was right. He was right. Get in there, start mixing it up, lose, 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 lose. Like you don't have the discipline, you don't have the business plan, you have none of that stuff, and you're just throwing darts at a board. You think you know what you're doing, but you don't. So we're just kind of jammed up here. Pure distribution above 52. Yeah, maybe. That's true, trade maker. So Howard, do you see how the business is different now? Do you see how this is different than this? You have to trade that very differently. Would I be buying a long position again here? No. Right? I I I would just leave it alone right now. They're stuck, exactly. Let the institutional traders unstick this area before you transact. I'm still looking for lower, but right now the shorts are trapped under 50 and the wholesalers are selling the 41 inventory at 54. Do you guys see that? This is where the point of control was yesterday, right? So that's where the inventory is priced. You see? 19,000 contracts there, right? And they're selling that up here. See? So it's good distribution, right? If I take this and I go to blocks, you'll be able to see it. We're taking this and we're selling it here. We put it on sale, people came running in to buy. Now we're going to put it on sale again and see if we can take out these lows. Exactly. The fact that there is buying but no follow through indicates that buying is just short covering. Exactly. And once the inventory has been cleared, exactly, right? The shorts are the only ones who are buying this. How can I tell? Because short sellers buy on the bid. They'll sit there and they'll bid because I've been a short seller, right? You ever Anybody on this call, have you ever had to try and cover a 500,000 share short? A million share short position. Well, you just can't go and buy that back with market orders. right? Because they see you coming, man. They're going to rip the price up so hard, right? Well, I have. I've had to cover 700,000 share short positions, 500,000 share short positions, right? You have to do different things to trade that because they're going to see you coming. And when they see you coming, they are going to want to roast you on an open flame. Okay? I know because when I'm running a short squeeze and I see a big buyer coming and I know that they're short, right? I'm going to I am going to take that short seller and I'm going to roast him like a rotisserie chicken at Costco. The beautiful thing now is it's electronic execution and algos, so that process happens very quickly and very efficiently. Now let's see if we can take out VWAP at 50 and a quarter, 50.31. Let's see. So when the candles get small like this and you're a scalper, you basically you have two choices. One is to build a position, the other one is to go grab a coffee and chill out, right? If you want to practice building a position, do it on the sim, right? But don't get carried away with it, right? Keep it realistic. Like, don't try and build a position with 50 contracts when you're a 3 contract trader, right? Just because you get into trouble and you're adding and stuff like that, right? Just keep it very realistic, right? There's going to be some buy orders at that low at 50. See how the offer is lifting? You see how we could not transact at VWAP? We came close. Now let's see if we can get back down there. Exactly. For smaller traders, wait for the business to change. Exactly. Exactly. Right? It's these little details that make a lot of difference. And it's not apparent right away, right? And knowing your skill level is very important, Raj. Exactly. Admitting your skill level is even more important, right? Because all human beings know their skill level, but they don't want to admit that they don't have the skill. Who does? Right? It's a human thing. Oh, I could do that, right? That's okay. Just be patient with yourself, right? You know when they tell traders to be patient? You know what it means? It means be patient with yourself. Be patient with yourself because it takes time to learn this stuff, right? That's what being patient means. It doesn't mean being patient with the market. The market doesn't care, right? Be patient with yourself because you need time to absorb and learn and transact and execute, right? It is a skill. You'll get it, right? If I could do it, anybody could do it, right? It just takes time. If we fail to correct lower, that could bring in more buyers. Jiraj, if we accept over 68.54 and a quarter, there's been a wall of selling there. If you look at the 4-hour candle wax chart, check this out. Look at the 4-hour chart. There's been a seller at 68.54 since we went up and tickled that level. What time is that? Wednesday at 2:30 my time. Exactly, Alexander, because you are the A plus setup, right? So there's been a seller there now since yesterday at 2:30 my time or 11 o'clock my time. There's been a seller at 54. Do you see that? Right? There's been a seller right here. It's like there's a goalie. right? You got Ken Dryden in goal for the Montreal Canadiens at 54, and he's not letting the puck get up to 69.02, right? So you could tell there's a wall of selling. So a lot of traders, large traders, what they'll be doing is they'll be building a short position in this area and looking for a break of 81. That's a difficult trade, and you'd have to manage that. It's not exactly an easy to manage trade, right? You could maybe break it down using the half-hour candle chart, right? You can use the half-hour candles to break that trade down. So if you're shorting this area, say you're just shorting 54, 55, right? There's your seller right there, right? So for larger traders, you're shorting this. Your stop is here, and you're targeting this 44 area, right? Just down here. So now we're underneath VWAP. Next stop is 47. Do you guys see that? Is this helpful? Right? If you look at the bottom of this candle here, at 47.5, that's where the last bid was, hours ago. So if I'm short 52, 53, 54, against that 56, I'll be putting some bids down here at 48. There you go, buddy. Nice. Perfect. Picture perfect short. Short 51, covered 49, 2 points in and out. Now, a lot of people will say, well, JJ, 2 points is not a lot. Well, 2 points is $100 on one E-mini contract. And if you do 5 contracts, that's a $500 trade. So if somebody walked up to you and handed you $500 today, would you say, no, thanks, I want 1,000? Take the $500. Right? $500 a day keeps the doctor away. You don't have to swing for the fences, right? Once you know what you're doing, you can size up, right? You can trade 3 or 4 or 5 contracts. Learn how to do it on the micro, perfect your skill, switch to the mini. Well done, Howard. Nice. Perfect. All right. So this is what we do in this room at tradingsyndicate.org is to try and get you guys to trade with common sense. Exactly. There you go, Alexander. Now you're cooking with gas, right? Be consistent, right? And be long-term greedy, right? Think 5 years, 10 years down the road. Work on building your skill. Work on building your skill. Work on paying yourself. Take money out of your accounts when you make money. Don't leave your trading profits in your accounts so you get tempted, right? Don't do that. You know, don't keep too much money in a brokerage account. Be long-term greedy. You know, every day you make a little bit of money, put it away, put it away, put it away. Take your profits and get them out of your trading account. Every week, every 2 weeks, you should be doing a wire transfer. Right? We'll get you there. We'll get you there. Okay, folks. Any questions? Nice inventory correction. There's 47. Just like we were hoping for. Exactly, Jiraj. Right? Shorts will also build out a position. And then when they come into cover, they'll be the bid. Good stuff. Okay, folks. Have a good morning. Stay out of trouble. And I will see you at 9 a.m. Eastern Time for our next session. Please come visit us at the Trading Syndicate. And make sure you check out our AI trading coach. Steve's always running some kind of a special. I can confidently say that if you are a trader and you're struggling, we are the best room to learn in because we're not going to give you any fancy double talk. We're just going to teach you how to make money. Okay? Thanks, everyone. Have a wonderful morning. Be safe out there. Bye for now.